Hi, it's Peter Temple, and this is the market report for Monday, May the 9th. Well, with Elliott wave, and that's what we're doing here, there are certain times when the market becomes exceptionally clear, and that tends to be at the bottoms and tops of large waves. And we are at a point where today, this to me, where we are, is an absolute no-brainer. So I'm going to take you through this, and I know there's a lot of people with opposing views out there. I've seen some pretty weird counts on this wave up, but I'll just we're going to start with the overview of the wave that came down from early November, which was an ABC wave, and we now have, and I'm putting this as an overall second wave here. You can see my great big yellow 2. So this is a double-pronged second wave because we came down in 3 waves here, and 3 waves always retrace. And I did a video last week which I really talked about the 3s and how our most recent wave started out with a 3. And once you have a 3, you cannot ever have a motive wave, because one of the hard rules in Elliott wave is if you have a motive wave, all of the waves within it, all of the, like wave 1, wave 3, and wave 5, have to always have motive waves within them, waves of 5, because Elliott wave is fractal. The second wave and the fourth wave, of course, are corrective, and they're going to be in 3s. So what we have here in this wave going up, and the reason I talk about 3s, is we have a wave here. This first wave up from the bottom was in 3 waves, A, B, C. So there is no second wave here, and that would be our first wave. But because there's no second wave, it's not motive. So this is a corrective wave. It will never change. And I see counts out there that say they think this is a motive wave, and it just is not possible. So so you have an A, B, and I've now got a C here because this new wave, this fourth wave or B wave, is so large there's nothing down here to really support it. So we're really looking at sort of an A, B, C again, which really reconfirms that this is not a motive wave, it's a corrective wave. So we have this fourth wave or B wave down, call it what you want. It is coming down now to the bottom here. This previous fourth is where I'm suggesting it's going to go to. It could go down a little lower because there's a little bit of a question as to whether this is the fourth. I'm labeling this as the fourth, and we have an incomplete fifth, and we're going to go up to the top. My target is still 2116. Let's jump in to a closer look at this wave. Here is a 15-minute chart of the S&P 500. The chart previous, I don't think I mentioned it, was a 2-hour chart of the S&P 500, and that may have been obvious to you, but just to make sure that we know that. And you can always stop the recording and go back if you want to check on things. So this is the 15-minute chart, and this is really concentrating. I've removed some of the nomenclature, and this was the top that we got to in sort of the 20th, 21st that would have been of April. And my last week's video talked about this 3-wave structure coming down. This is an ABC here. Well, we have even a larger ABC here, and then so we're all in 3s. We also, if this is a 4th wave, and it would be, it's overlapping into the area of the first wave. So there is nothing motive at all about this wave coming down. It is a corrective wave. But now we have an ending diagonal. And we got this on Friday. We had this wave up, and it became very obvious that it is an ending diagonal. It is missing the last wave down. So we have a 1, 2, 3, 4, and we are missing a wave down. So the thing about an ending diagonal is you see it in the 4th wave always overlaps the 1st wave. So it is a triangle, but it is an ending move. And so I am expecting on Sunday, pretty obvious to me, that we're going to come down here, and our target is probably 2033. It probably will go below that, I would think, but it always goes below on a bearish one. It goes below the lower trend line. So we call that a throwover. And so that's what we're going to have, and then that will finish off our 4th wave, because I've got this at the previous 4th, and then we will head up in 5 waves to the top again, and that should finish off this great big wave. Now I'm just going to jump into the futures, because a lot of you really like the futures, and just show you that this ending diagonal, this is ES, so this is the S&P 500 futures, and we've got the same ending diagonal here. It's very clear. 1, 2, 3, 4, and we have a wave down. And I had a couple of people asking me, well, why do we know it's coming down here? Well, there's a couple of reasons. It's an ending diagonal, obviously, but this wave has gone up in 3 waves. You can see it here. And 3 waves up always retrace. And if you still doubt that, I'm going to give you one more chart that we'll go into, and we're going to zoom into this 4th wave and see how obvious this 3 waves is. So here we are again, E-minis, and this is the S&P 500 futures, and we're zoomed right in. This is a 5-minute chart of ES, and you can see this wave up that we had on Friday, and I'll just take you through this. This would be the 3rd wave down on this ending diagonal. We're looking at the top being the 4th wave, and what we've had here is an ABC. See, there's no 4th wave in here. This is a very obvious ABC, and we have a very much larger ABC. So there is no question that this thing is a corrective wave and has to come down. As well, it's in an ending diagonal, so that also tells us. Now, if you're not using this little trick here, you can always take, this is something you should use with your Fibonacci tool. I use the retracement tool with a projection to 161 or 1.618 up here, so 161%. You take the first wave up and you do the length of your Fibonacci tool to there, and the projection or extension to 1.61 or 1.618 would be where your C wave will end. So you'll have an A, and then you'll have a B, and your C wave will typically end at the 1.618. In fact, typically, almost always. So on Sunday, we'll see this. It didn't quite finish. It will probably start or open up on here, and we'll head down. So that's my sort of no-brainer on where we are. We'll go look at some of the rest of the market. Here we are looking at the Nasdaq Composite, and this is a 30-minute chart. And I just want to show you this wave as well, which has come down. This is not a motive wave. We have overlaps here in terms of our wave structure, and we also have got this ending diagonal right here. So we can see that again, 1, 2, 3, 4, and we've got a 5 wave down. This actually is, I've got this labeled as a 3, top of the 3 here, 4, and 5. So we should come down, and this is actually the 38% retrace line from the very bottom. And we may just come down here or go a little lower to finish off this ending diagonal, and then we should head up with the rest of the market. And this wave up, because it's going to be an ending wave in both the S&P and the Nasdaq and the Dow, will be in 5 waves. It'll go 1, 2, and I'll draw this out once at the beginning of the week for you so that you have it. 1, 2, or sorry, 1 up, 2 down, a big 3, 4, 5, and it may go up quite quickly. We may see this go up in a few days. So it'll be amazing to see what happens here. But that is the projection going forward. Now let's go look at a couple of another couple of indices, and then I will get into a quick look at the euro and the Canadian dollar. Here is the 30-minute chart of the Dow. I've gotten rid of some of the nomenclature here so that you can see. I really wanted to concentrate on this 4th wave down. You can see that it's overlapping. We've got an A, B, C here, and again an ending diagonal, which should head down in its last wave to the previous 4th. And this is our 4 here going up. We should get up to a 5, and that will end off this big wave up for the Dow. Here is a 10-minute chart of the Dow so that you can actually, we're zoomed into this ending diagonal. And again, here you can see the ABC configuration for this wave. It did not go to a new high here, and so this should end up going down. So there's a couple of reasons for it to head south. Here is the 2-hour chart of the G-Dow, the global Dow. And we've seen this one before. It's got 5 waves down, very obviously. And we have got 3 waves up here. An ABC to a second wave at the 62% retrace level. So it's pretty obviously where we're going here. We're going down. But this is a big 4th wave, and it's come down in 3 waves. You can see it here. And so it's ready to head back up again. We may get a little tiny wave down here on Monday. It may come down to this, probably a double bottom here as we open, and then I expect us to head up. But this needs a double top here, to me anyway, obviously, before it starts heading down. Here's the daily chart of the euro. Now, I have talked about ad nauseum the fact that all of the U.S. equities and the currencies are moving in tandem. So right now it's been back and forth. This was actually moving contra to the U.S. indices for a while, but now it's back so that it's moving in lockstep with it. And as as the euro has been going up, the U.S. equities have been going up. And I have said from the very beginning in this corrective pattern that these waves have to correct 38%. This is the 38% line, and we almost got here in September of last year, but we are now past the top of this triangle, which was an option, and I believe we are going up to the top here. So we're in a very small fourth wave. We should see this go up to the top as the U.S. equities top, and then we're going to get a big turn down in a very large fifth wave. And so that's what we have to look forward to. So this is down in a fourth wave now. That has caused our fourth wave in the, because it's really the dollar as well has done the same thing. It's in the reverse pattern. It's in a fourth wave as well. The U.S. equities are in a fourth wave, and we're just setting up to do a fifth wave up. Let's go to one more currency, which is the Canadian dollar. Here's the daily chart of the US dollar Canadian dollar pair. And the bigger picture is that we've had this very large third wave up, and then we've got this fourth wave here, which is coming back to almost the previous fourth here. I'm not sure that it's going to make it, but it's going to get close. And we've had this ABC structure, which is a corrective wave, and we've now had a fourth wave form here. I'm just going to jump in a little tighter on this and show you the ABC configuration. But this should now turn and head down here. This, of course, is a reverse chart to the euro, but it's actually doing the same thing as the euro, and I'm expecting this to bottom out, or it could go a little bit lower, but I think we're going to see a bottom out, and I'll show you why why I think that. Here's a 2-hour chart zoomed in of the US dollar Canadian dollar, and we can see we've got an ending diagonal here again, and it looks like the way I've labeled this that we have finished the fifth wave here. I'm not 100% sure of that, but we've had a wave which has come back again. This is a corrective wave because it's in three waves. There is no second wave here, so it's an A, B, C wave, and it looks like it's finished. And in fact, if we were to take our Fibonacci tool, and this is what I typically do, and I look at the top of the A wave, you can see with the extension it goes right to here. So that's the 1.61.8 extension, which tells me this wave should be finished. It's gone to the previous fourth. So I think what we're going to do is we're going to come down for sure. I think we're going to end here and do a double bottom, although we could go lower, but I think this ending diagonal is done just because if I extend this, is not converging lines anymore. So an ending diagonal needs to be converging lines. I think we've done it. So again, if we were to look at this in context with all of the other currencies and the US market, we've got everything is in a fourth wave. Everything has come down in three waves. We have to go back up and do the fifth wave. The entire market is moving in tandem. And so that's the reason I'm taking my stance. I think it's pretty obvious as to what's going on. You can do what you like, but whatever you do, stay safe out there. Good trading.